Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Thursday, and we had a big day on Wall Street. Rally day. What was it? Was it an oversold rally? Was it the start of something new? Nobody truly knows, except for there was some power, there was some commitment, and it was pretty broad-based. Not everything went, and not everything was, created equal, but there was definitely a lot of money to be made. It would have been better, obviously, or easier being long from yesterday into today, but at least there was also some ways in, just in case you didn't have the confidence to be in long overnight. I know for today I came in flat, and I wasn't exactly sure what I wanted to do. I got a little thrown off that, remember we were talking in the recap yesterday that the S&P was negative or wasn't really strong, closing the lows, but then you also had the reversal that was more clean cut in the Russell, in the MDY, in some stocks. So there was mixed signals, and mixed signals in an area that's 70 to 80 handles off the high. At least you could have been flat versus short. Obviously better to be long. Let's just start going through some charts. So if you look here at the S&P, this was the last rally where you had your red dog reversal, and it always happens differently. Here you had your reversal low, came back above it, giving you clues to be long for some follow through. Here, you really didn't have much of a clue or a signal. The only thing we had here was this level here that I identified, the 100-day, the 2040-ish zone. So you had to really be confident, take longs into that. So with that being said, it did cross above this prior pivot. This prior pivot here was 2050. Took back the 50-day, showing some strength. So the question, I guess, now is, does it get rejected? Your next real pivot here comes in a little bit closer to about 2080. So from where we closed, if you take a closer look here, of about, what was the close here? 2066. So there's still about another 10, 15 handles before the bears need to make a stand. If the bears want to make sure that this is not the low, then this is where they want to reject price. And right now, remains to be seen. Big wide range bar engulf this. Definitely makes some sense to be long a little bit. If you would have been in the Russell, per se, okay, look at that. The Russell gave you a nice reversal. The Russell, was a leading indicator. Closed above a prior high. You could have taken that home long. You had a big gap and go, and now, almost right back there. So there's some alpha in the Russell. Russell's showing alpha. With that being said, I remember talking about this 119 area, 119.50, 119.80 is a good spot to buy back, and unfortunately I did not. And here it is back here. Maybe an inside day or so you can get back into it. The mid-caps also. Look at this red dog reversal, guys, yesterday. Stock pulled back, or the ETF pulled back. This is when it broke the 8-day moving average. Here, closing the lows, went below it, right? Went below 268 here to 267.87, like 50 cents, not even risk here for a nice entry into a big gap and go. And now you could trade versus this, but ultimately day and a half trade. We talk about day and a half trades. Doesn't get much better than that. Doesn't always, now at this point you have to do some work above this gap, but all in all, that trade is typically my bread and butter. And unfortunately, maybe I'm eating some stale bagels. But today I had a good day, but anyway, in general, it would have been nice to have the gap up. We've seen a lot of gap and goes, and that was one of them. Qs, not as powerful. Definitely a little bit more skepticism there. If you look here, when across this downtrend, this was your stop out. Then, all the way down from 108 into this area. Little red dog reversal today was weaker because some tech names were weak, Intel pre-announced, et cetera, et cetera. See if it breaks above this, and chances are there's some room to run to a little bit higher, maybe 106.76-ish. This is what they call sometimes King and Queens formation, railroad tracks, red, green. Above this, there you go. Oil was weak. Not everything rallied. Closed in the lows. Market didn't care about it today. This is that range that we've been talking about. Let's get back up here. It's below it. Market didn't seem to care. Maybe it'll care if it starts heading back towards these lows. Early in the week, we talked about a day one below this range right here. First time we closed below it. Some guys got short. If you're short, there you go. XLEs really lagged today. Closed red. Didn't really know that the market reacted and gave you a 200-some point rally. So this is not the place to be. And that's the way you have it in the market. There's not every place doesn't always go. Not every place is strong. You have to be in the right place, right time, and hopefully, you have some progress. Today, early on, Apple was weak. Apple's a stock that I trade a lot. I posted the chart. Said if we break below yesterday's low, maybe we get that washout for a trade. And pretty textbook here in Apple, okay? Just you look at the stock, you look at the last major strategy here above the prior high earnings gap. This is when it took out 120.50. It basically had a reversal right there. You had your 8-day moving average break there. You had a pennant break right here. And then for the first time, you had a red dog reversal. Okay, this is a reversal or a technique that I use a lot. What happened here is it traded below 122.11, went as low as 121.63, recrossed above this. This was your buy. So basically, you had about 50 cents worth of risk, and you could have just sat in it all day for a nice bar. Haven't seen a situation like this in a little bit. We did see one here, and then you had an inside day, and definitely didn't get any follow through. So maybe this time we get a little follow through. You do have option expiration tomorrow, so you would think the path of least resistance would be back to somewhere close to 125, which isn't saying a lot. It's on the 50 cents, or maybe 126. Last week or this week we spent a lot of time maneuvering around this 125, 126 area. So typically there could be a lot of puts bought below it, a lot of calls bought above it. So 125, could be a little bit of a magnet for tomorrow. And if you look here, we closed, where did we close on Apple? We closed at 124.45, so that would be a little bit higher. And then we'll figure out what's next. All in all, nice reversal candle. Hopefully made some money in Apple. It even gave you some kind of a buyable dip today, when it happened here. This was your first initial move. That was your quick little move below, up. Then it triggered somewhat above this 124.60, and it's actually still here. Not much, right after, a lot of things didn't have much of a move. Even the spiders. I didn't come along the spiders. I bought the first 30-minute dip, and this was by what time was this? This was what time do we have here on the clock? By 9:50, the Dow was up 170 points. I remember texting it or putting on the VTF saying the Dow just went 170 points in the first 12 minutes or 18 minutes. So I figured that dip would be buyable. So within this is where I bought the spiders, and I'm still in them. You had a quick little bull flag continuation, came back up during lunch, and then gave you another breakout type move in the afternoon, which doesn't happen often. So move one, consolidation, move two. At least that happened today. That's what traders like. You got to have some kind of continuation. And this was your wake up move, buy the dip, flag, a little bit of cash flow, afternoon consolidation, continuation. Haven't seen something like that in a little while, and that's what created this nice little wide range bar. And now we'll see if we can get a little bit of follow through tomorrow. We'll see. Facebook, you look at it now, it doesn't look phenomenal, but I guess you could say that it's slow and not everything breaks out. This is when it broke above 77. Here was your topping tail around 82, came back in, retested right here, closed below the small little 2-day pivot. So it could gain some traction. Not a blockbuster type move, but it's still sort of hanging around. Twitter, same. You had a red dog reversal yesterday in it. Remember that into the gap? We talked about it. Here was your move to start the year. That was above, what was that, 37-ish, 38. Then couldn't really have much traction. Red dog reversal right here. What is a red dog reversal? Stock makes a high at 50, comes back into 46. You want to catch a counter trend trade. Traded into the gap. Couldn't get much traction. Traded back above 45.79. If you held it for a day and a half, you made some decent money. That's a 2-day trade. Still not a breakout trade, but decent for cash flow. Let's see what LinkedIn do today. Not much. Still a huge, rangy type trade. Maybe one day it goes. Some bios. Halo. I think this stock goes at some particular point. It's been, hovering up here for a while. I know Sperling's been all over it. It still looks decent. At some point, perhaps it gets a big volume move above 16 and goes. Some of the other ones that we looked at, CYTK, did that do anything? Still hanging around. What did his DEPO do today? DEPO, new highs. That's nice. What else? NFLX definitely gave you a little extra push. Nothing special. We've talked about potentially trading some kind of bounce, and it bounced into the moving averages. Amazon also, after a pullback from breaking the 8-day, which was right here, opened up a little bit, crossed above a prior high. Still doesn't look like a blockbuster trade, but for cash flow, it gave you something today. Baidu is a little weaker. Baba is still broken. Still we talked about, not getting too excited here, even though they bought Snapchat or whatever it is. Still in this lethargic range, and not a hell of a lot to do. Sometimes there's just not a hell of a lot to do. And it's still caught in this downtrend. Same downtrend here. Remember this beautiful trade we caught from 92 and change, took out the AAPL high, went to 120, and then after it had this little reversal up here, hasn't been a good trade since. This seemed promising right here. I was in that trade. I was thinking maybe this was the end. This is when the downtrend could be broken to the upside. Here we are testing the breakout, and that happened. Got out, haven't really looked much back since, and now here we are down here. And I guess it's a move above 85 on heavy volume. Maybe it's better, but at this point, still hovering near lows, and there's not much to do. Tesla was weak today. Stock's been broken. Still looks broken. Still caught in this downtrend. This is when you had this high-level flag. Looked promising. Remember that? It was right here, actually. Looked as if perhaps it could continue, stay above the 8-day, stay above the 21-day strong trend, and then that happened. And then since this, it's been just downtrending since, and now it's hovering near this 185. Breaks 185, you would think some guys who like to be short stuff will press. The only time it truly goes up now is when there are some stories floating around about it in Apple, and who knows if that ever happens. So don't be buying it just for that. And on a macro stance, you do have a big level here, and if it were to break it, it's come a long way. Even though it's pulled in a lot, doesn't mean you could just be buying into this 185, because if it breaks, next level is probably 160 and they're below. What did gold do today? I know gold started up. Did it hold? No. Gold couldn't even hold an up open. The GDX, which is broken, also gave you a Redler reversal. Not even a true day-and-a-half trade. TLT's third day. What do we do on a third day? We typically sell. We don't buy. And that's what happened here. You had your gap up. Day two was up $1, closed red. Still seems as if it's going to try something new. We talk about trends, and here was that accelerated trend that broke to the downside. Here was your island bottom, held it, gave you another day, and now it's, we'll see what happens here. Trade it long versus 125.75. If it breaks below that, not much more than a high, lower high, and another one. So we'll see. The banks did give you some power. Some had follow through after the first few hours. Some didn't. Morgan Stanley, definitely a standout. Big wide range bar, huge commitment to it all day long. It took out this area, so this is in the game. You want to be in a bank, perhaps Morgan Stanley's one of them. Goldman Sachs also woke up. Wide range bar, didn't quite take out the top area here, but okay. Citigroup, bit more of a doji. It also took out the prior pivot, so if you want to just talk about pivots, most of these came right into there, so now you have some gaps. Trade Citigroup versus gap. The longer it stays above this gap, the higher the percentage it can continue. Same thing goes for Morgan Stanley. If you weren't in it, got in it today, or you said, I'm going to wait to see how it pans out, big strong close, get some inside days, traded long versus gap. The longer this pro gap stays in, the higher the percentage play or probability that it stays in the direction of that gap. So with all that said, it hasn't been an easy market. Last week we lost the 8 and 21-day moving average. This week we held the 100. The reason why you sell the 8 and 21 days, so you could test the 50, you could test the 100-day. So when there is some type of oversold bounce like this, you're not just making money back from holding your nose and going underwater. You could enter it at those spots. Would we have loved a better situation with the spiders? For me, you know, it was a little weird. I unfortunately focused on it yesterday and I didn't have it overnight, which I typically do. If you focused on the mid caps, on the Russell, the bios, much better spot. Same with some of the other stocks. You know, as far as individual names, not everyone's been created equal. Just went over a lot of them. Today was your first potential reversal situation in Apple. We'll see if that continues tomorrow. And other than that, you know, there's definitely going to be about a little bit of a grudge match spot. You know, you go back to the S&P. You know, you had a nice wide range bar above the prior high. This will be the spot if the bears want to reject price here and put a topping tail in to make a high, a lower high right here. This is your spot. So there's a bit more room to see if you know, we can continue and get those oscillators back to zero-ish. Again, first day, if you waited and bought even when it just took out these highs here, you had some opportunity. The other sectors were definitely a little bit more clear cut where you had a reversal closing the highs. So those were easier trades if you were in them. So there's always easier trades. There's always trades that are a little bit more complicated. Hopefully we find the easier ones, and lately they've been a little far and few between. Tomorrow I'm in Short Hills. I will put my note out there for those of you on Twitter, just so you know. I will be spending a lot of my day on my Redler All Access Twitter from 9:30 to 4, going over the price action also as well with the VTF. But as far as the big Twitter feed, I will be putting my charts, pre-market levels, giving you guys a plan, but it's going to be up to you to learn how to confirm that plan, and we'll all navigate together in some sort. Have a great night. See you tomorrow, and Thirsty Thursday. Go have a drink and relax. It's been a long week.